Hello and thank you for joining us at XM.com for this Forex Preview video. The much anticipated first FOMC meeting of 2023 is coming up on Wednesday. And leading up to this meeting, it gathered a lot of speculation by investors about a potential slowdown by the Fed. I'm Cristina Marujos. With me today is our senior investment analyst, Haralambos Pissouros. So Haralambos, markets are expecting the Fed to raise rates by a smaller 25 basis points hike this time. But more importantly, they will be eager to find out how the committee plans to move forward. So what will we likely see at Wednesday's meeting?
Hello, Christina. Yes, indeed, the Fed is expected to deliver a smaller 25 basis points hike on Wednesday, with some policymakers lately admitting that shifting to a lower gear may be appropriate. However, most of them have been sticking to their guns that interest rates will probably rise to slightly above 5% in line with the December dot plot, and that they will stay there for a prolonged period of time thereafter. However, this has been a bone of contention as the market insists that interest rates are likely to rise to slightly below 5% and that nearly 50 basis points worth of rate cuts may be warranted by the end of the year. It seems that investors overly rely on economic data rather than the Fed communication, and especially the steady cooling of inflation, but also the weaker prints of releases more related to economic growth, like the retail sales and the PMIs. On Friday, after the Fed decision, the employment report for December is expected to reveal a slowdown in job gains, but with the unemployment rate staying close to its 5-decade low and wages accelerating, it would reflect a still tight labor market, which may be the only argument in favor of the Fed's narrative. Having said all that, though, with most officials sticking to their guns heading into the meeting, I don't expect a major shift. I believe that the statement will reflect the committee's willingness to take interest rates above 5%, something which could be made crystal clear by Fed Chair Powell at the press conference. Also, Powell could attempt once again to push back on rate cut expectations, as any remarks enhancing the market's view could raise credibility and integrity issues.
And now let's look at the market reaction. How could the dollar perform? Could it gain this week, especially after the Fed meeting?
Recent history has shown that market participants are willing to sell dollars aggressively when data enhances their pivot view, but they are not buying with the same excitement when economic releases surprise to the upside. Thus, even if the Fed continues to signal that interest rates are likely to rise above 5%, and even if Fed Chair Powell pours more cold water on rate cut expectations at the press conference following the decision, the dollar is unlikely to skyrocket. It could rebound somewhat and perhaps extend its gains in the case of a solid NFP report, but with the first sign pointing to deeper economic wounds, investors may reinitiate short positions. That's why dollar traders may pay even more attention to the ISM non-manufacturing PMI for January, which is scheduled to be released on Friday after the NFPs. Another month of contraction could well weigh on the dollar, while a rebound back above 50, as the forecast currently suggests, may extend a potential corrective rebound for a while longer. Now, an overly hawkish ECB on Thursday, confirming expectations of more 50 basis points rate increments beyond February, could also limit any dollar strength, as euro-dollar is by far the largest component of the dollar index with a 57.6% weight. In other words, should this week's agenda end up net positive for the US dollar, we can see a decent corrective rebound within the prevailing downtrend, but not the beginning of a trend reversal, especially if investors remain convinced that the Fed may need to cut rates at some point later this year.
It looks like it's going to be an interesting week for the US dollar. Haralambos, thanks so much. This was a Forex Preview on the Federal Reserve meeting coming up on Wednesday here at XM.com.